Okay.
Hi, everybody. Jason Qualia here. I'm here with Ron Tuitt from Bank Financial, partner Jack Butita from Elite Realty, Vince from Bank Financial, and we're here talking about succession planning. We've got Miss Fine, who's going to be telling us all about the intricacies of planning for your business's succession. So, Ron, can you tell us a little bit about what you guys are doing at Bank Financial and who you are?
Sure, absolutely. Yeah, my name is Ron Tuitt. I work with Bank Financial. I am a head of the wealth advisory team at the bank for wealth management. And of course, Bank Financial is a full service bank, commercial, retail, wealth management. And we're here because we want to help you all with succession planning that Linda Fine will be talking about today. And we're real excited about that. And hopefully you'll learn something from that. And if we can be of any help, we have other members of our team here that can help. And
Lead.
Schaumburg Lead is we network with local businesses to try to bring their business to a higher level. It's a small group that we meet once a month here at 1750 East Gulf Road. I have my commercial real estate office here, Elite Realty, and we were kind enough to be approached by Ron from Bank Financial to host this meeting today, which was a pleasure. We were catered out of Rosie's Catering, and we have a great group of people here that we're really excited about. And we hopefully that you'll patronize the businesses that are here and help us make them grow.
All right, so before we introduce you to all the professionals we have in the room, I just wanted to thank Rosie's Sidekick Sandwich Shop, located on California Avenue in Logan Square, and here in Schaumburg at 1750 East Gulf Road. The Italian beef's phenomenal. They've got a muffaletta sandwich. I think everyone over here is smiling, so I think they enjoyed the sandwiches today. So now we're going to go through and we're going to introduce all our serious professionals in the room. All right.
Just turning it off. Okay. Hello, everybody. My name is Susan DeMeo Sargent. I am Senior Vice President at Pan American Bank and Trust. We are a business bank for entrepreneurs here in the Chicagoland area, privately held. So if there's any banking needs, let me know. Instead of you either fit in other banks' boxes or not, we try to build a box around you. So let us know if we can help.
Mm-hmm. Hi, my name is Malia. I just moved to the Schaumburg, Illinois area. I'm initially from Michigan, and my area of expertise is marketing in the health and wellness field.
Hi, I'm Gabrielle. I work for Shift 4, and I work with restaurants and working to provide them with the POS software and the credit card processing.
Hi, I'm Nick Friedman. I work with Bank Financial. I'm the teller manager of the Lincolnwood branch, and I also sell annuities and life insurance.
Hello, Anya Lesnicki, small business banking, Bank Financial small business banking relationship manager. I work with the local businesses in the community. One of the products that I would like to actually highlight, we are again full service bank, but I'd like to highlight our business money market. Currently, it's yielding 4.75% APY, and it is again a liquid account. Minimum to open is 50, but again, we are a full service bank, and we do have a full suite of products.
Excellent.
Hi, everybody. Good morning, everyone. Some people already know me. My name is Maria Garcia. I come from Bank Financial. I'm the banker supervisor in there, and same thing as my coworker. We offer full service in banking, so whatever you guys need, our business cards in our desk in case we can help you with any bank accounts.
Thank you.
Mm-hmm. Thank you.
Hi, my name is Vasia. I represent a 100% woman-owned facilities maintenance company. We do construction, remodeling, landscaping, snow removal, and full project management. We're nationwide.
How's it going? My name is Chris Sutter. I'm an independent sales consultant, small business, big business, one-on-one coaching, facilitating all your sales and marketing needs.
Hey guys, Daniel Winsauer representing Nico Roofing and Exteriors. We help you with roofing for residential or commercial. Before the winter comes, definitely a good time to get a last inspection in.
I'm Greg Adams. I'm also from Bank Financial. We're really happy to help sponsor this event to support all the businesses that are here. And we've got a number of people here that can talk about trust wealth services, business lending, business deposits, and other banking services that can support your business.
Lucas Weber, I'm with Risk Management Solutions. We do commercial insurance for hard to place risks.
Hi, I'm Daniela Krakow. I am your favorite Chicago singer, and I'm also with the Jersey Girls.
Hello, I'm Still Schmidt and I'm a tattoo artist. So if you want something to some arts to make it, or some art in your body, you're welcome. Come to Rolling Melons and Breakable Links.
Good afternoon, I'm John Muno, and I do consulting for small business owners that are looking to exit strategy, succession planning. So this is going to be a great topic, I'm sure.
Hi, I'm Linda Steele. I'm the Senior Operations Manager at Hamilton Lakes Athletic Club. We're a club in Itasca. I'm a personal trainer also, and I own a company called Macro Made Meals. We're a meal prep company.
Hi, my name's Anthony Barchetto. I'm president and co-founder of Blue Star Security in Chicago. We're a licensed private detective and armed protection agency. We employ over 1,000 W-2 employees. All are active or retired law enforcement.
Hello, Schaumburg Elite. My name is Kat Mendez, and I'm the Sales and Marketing Manager with the Junk Luggers of the Chicago Northwest suburbs. We work with residential as well as commercial properties for all of your eco-friendly junk and furniture removal needs, as well as container rentals. Again, my name is Kat Mendez. It's great to be here.
Hey, Schaumburg Elite. My name is Dave Losavio. I'm with the suburban office of Mark Allen Realty, and I am the Northwest Suburbs fastest growing listing agent, also an MC for hire, public speaker. I do a monthly live stream 2 times a month. And recently I started raising capital for a senior living roll-up. Great to meet y'all.
Ken, you're up. You got to say something. We got Ken Lorenz here from Green Tech.
Hi, I'm Ken Lawrence from Green Tech Cold Chain Solutions. Our company does materials we put in refrigerated trucks and trailers and containers and stuff like that to reduce the carbon footprint.
Perfect. Next we have
Good afternoon, everyone. Nick Zito from Village of Schaumburg, Economic Development. Excited to see everyone today. Talk to me if you would like to learn more about all the exciting developments going on in the village. Got 90 North Entertainment and Business District, and also we run a small business grant and loan program to help businesses grow. Good to see everyone.
How do you do, everybody? I'm Joe DeBlaze with Bank Financial. I'm a business banker, and I help businesses learn that they don't need to be a small fish in a big pond. We're a small community bank that has been in existence for 100 years. And so if you're looking to speak with someone that's here local, reach out to someone here at Bank Financial. Joe DeBlaze, thank you.
Good morning. My name is Forrester Faya. I too am with Bank Financial. I'm in the commercial finance department. If you're giving terms to your customers and they're not paying on time, we have a number of products that can help you grow your business and get beyond what you're currently struggling with. Forrester Faya with Bank Financial.
Paul Kuzak with Bank Financial, Senior Vice President of Business Banking. And I'm just here, glad to meet everybody. And I work with all small businesses to try to be the banker for your business.
Hi, everyone. Chris Jordan. I'm the Regional Director for Better World Technology. We are a managed services provider in the IT field, which is a fancy way to say we provide outsourced IT solutions. We can be a piece, a part, or a whole of your IT operations. Thank you.
Hey everyone, my name is Dmitry Sarev. I'm the owner and president of Viatas Global Chauffeur Transportation. We provide a high-end limousine service for corporate and private clients. Thank you.
Hi, Fred Picaro from Rosie Psychic Sandwich Shop. We give you the healthy choice of your luncheons and your breakfast meetings. We cater from small to large companies and private homes. Thank you very much.
Hey, Vince.
We did an introduction. Vince Bailey, Bank Financial. I work in the Trust and Wealth Management Department. I'm responsible for helping clients with their investments and also their estate planning.
All right, next we have the star of the show.
Thank you, everybody, for having me here. Linda Vine, attorney at
at Buckley Fine Law. We're a 17 attorney firm in downtown Barrington, primarily transactional, a little bit of litigation. I lead our firm's estate planning and estate and trust administration group. And I also work in our corporate group. So as we all know, there's many ties together between estate planning and business succession planning. So that's what I do every day for almost 20 years. I've been helping families and businesses plan for the next generation, plan for incapacity, death, and then actually implementing those plans once the time comes, whether somebody's ready to retire or has passed away. So today, yeah. It was working.
Of course, isn't that the way it goes?
I promise it was working all morning.
There it is.
So the goal today is to talk through things that you should start thinking about with your business, whether you're going to transition it or implement a succession plan in the near future or in the distant future. You want to plan for retirement or death. What are some of the things you should be thinking about now? And what are some things that you should be thinking about with respect not just to the operations and succession of the business, but also estate planning. And then we'll dive into a little bit of valuations, value your business and the main types of valuations that we see. And then also buy-sell agreements, which every business should have, whether you're planning to pass on the business soon or not in the near future. It's a very, very important document. Okay. So what are some of the elements? If you're considering transitioning your business, first think through what do you want to happen? In a perfect world, what is your vision? What are your financial and non-financial goals? And do you want to remain involved in the business? Do you want to never think about it again? You know, some people say, oh, I would like to work in the business a while longer, but in a more limited role. Some people say, no, I want to go off in my yacht and never think about it again, right? So think about what you really want and have that visualized in your mind. And as you do that, think about the short term and the long term. When do you want that plan to happen? It's very important to plan ahead with this so that you can actually effectuate what your goals are. Like if you're still growing the business, are you looking to grow it to a certain point and then maybe sell or transition it to the next generation? Or do you want to get out of it sooner rather than later? It's just so important to plan ahead. And something that we see a lot in business succession planning with our clients is we always have to talk through with them, not just the financial, but also the emotional aspects of transitioning away from being in charge, right? A lot of people think, well, it's fine, I don't want that responsibility anymore. But if you sell to a third party, or maybe even a family member, and they are running things a little bit differently than you would, and you're not the owner anymore, you're not the manager, you're not telling them they can or cannot do this, then it can be very difficult emotionally to come to accept that. And sometimes people end up just walking away. So think about how much you want to be involved. And also some financial aspects that people don't always think about are the financial ones, like not just your loss of salary, but company distributions, deductions. If your company owns your car, it's not going to be happening that way anymore. It's all going to move to you individually and be a little bit more expensive. And operationally, will the business be ready when you are ready to move on? Will it be successful if you retire? Are you the one that's holding it all together? So if you're not there, maybe it will crumble and fall apart. Hopefully not, but these are all things that you could plan for so that it can be successful. Oh. Just not reading. Well, I can continue on without. You're doing great. And so then you have to think through who is going to take over if you're not there. Do you have family members or children in place that can that you're teaching to run the business like you would? Are there outsiders or just employees that you think may be able to step in that role when the time comes? And if you don't have any of those people in place, how are you going to find them and get them in there so that when you are ready to move on, you have the team in place to do so? Or even if you're just thinking about retiring, having a team in place that can run it so you're not there as many hours as you are maybe now and can manage it for you so you can live more of the lifestyle you'd like to. You know, that takes a lot of time to find those people because nobody is you, right? Your business is your baby. You work on it night and day. It is something that you have built from the ground up in a lot of instances. So finding that right person can be difficult. So, like I mentioned a little bit before, when do you start that process? You start it now, because it can take time. And it's not just thinking about what you want and getting the right people in place. It's also cleaning up the books and everything so you can prepare it for that next step. And also, there's estate planning that you need to think about in your business succession planning. And all of that needs to happen well before you sell. So if you, sometimes we'll have new clients come to us with the LOI, letter of intent with somebody wanting to buy their business and they have not done any estate planning yet. And they think that now they can do it before the business sells. And really it's too late. So plan ahead, meet with an attorney sooner rather than later so you can at least know what steps you should be thinking about.
Is this the slide you're on?
Let's see. Yep. And if you do, talking about estate planning and succession planning, that's a whole separate topic, but just to touch on it briefly, you can, if you do it soon enough before you sell, you can leverage that whole process with your with valuation discounts. So if you transfer part to an irrevocable trust that names your family members as beneficiaries and gift that over, there's an estate tax exemption that can be applied to that business, and you get a valuation of that business, and you'll get what's called discounting. So that business, if it's worth $9 million, maybe worth 1/3 less because of the way you're structuring that transaction. So you could get $6 million or the whole $9 million business out of your estate at maybe a valuation of $6 million. So you're really leveraging that transaction, preserving estate tax exemption, and putting the assets in a vehicle for your family that is protected, very well protected from estate tax for the next generation, from generation skipping transfer tax. Can everyone hear me in the back? Sometimes I'm not so loud. Okay. You're doing great. Thank you. It can protect you or your family members from creditors, so we can structure it in a way so that if a child gets sued or a spouse gets sued, what's in that trust cannot be breached by a judge, whether it's a divorce judge or somebody that sued you for whatever reason related to the business or not related to the business. You can put the terms in place to protect those assets from the beneficiaries themselves, their personal spending habits, or if there's a divorce or a second marriage or a disabled family member. You can have it all in there, and you can put your business in there now where it can grow state tax free, leveraging all of these things. So as you formulate your plan, prepare the business for sale. We talked about thinking about all of those different issues, financial, non-financial, operational, the people you have in place, the people you should get in place, but also you need to clean up the books of the business itself. So these are things we've talked about outside of the business, but the actual business itself should be cleaned up. A lot of times people will, again, come in with that letter of intent and it will not be, the books will not be cleaned up. And so then when the buyer goes through the process of looking at everything, they find reasons to try to pay less, right? You've been overpaying your employees. You've got family members on salary that you're not necessarily paying what they should be paid. You're paying them more, or they're not actually working in the company, or you're taking deductions that you shouldn't be taking. All of those things should be cleaned up well beforehand. Yeah, I'm good. Also, resolve any potential claims or lawsuits that might be out there. So it's all out off the books before somebody else digs into them. If there's environmental issues, if it's real property, things like that, you want to have that at least be aware of it, what it would cost to fix it, not necessarily fix it, but you want that information in your hands before you put the business out on the market. And then once it's cleaned up, you determine its potential sale value. And you usually need a professional valuation advisor to do this. And there's separate companies that do this work, and it's expensive in some cases, but they can be really worth it. And they will come in and look at your business itself and apply factors to determine what they think it could sell for. There's different valuation methods. It depends on the type of business, location, market, growth factors, all of that. But the main approaches to valuing companies are the income approach, asset-based or adjusted book value approach, and the market approach. With the income approach, the goal is to estimate the current fair market value by reviewing the historical earnings and adjusting them to project future revenue. So that's where you hear that EBITDA, if anyone's heard that before. That's a common shortened term for evaluating the earnings before interest, taxes, and depreciation and amortization, with the goal of anticipating the return on the buyer's investment. So they think, what am I going to get back on this investment, income-wise? And they look at the numbers, they adjust them down for extraordinary items. Maybe you had a really good year that was outside the norm, or an expense that was outside the norm. They'd look at all of those factors to come up with a number. And then there's the asset valuation or adjusted book value approach. We don't see this as much. It's more if there's an asset sale. Sometimes transactions will be structured to just purchase the assets of the business rather than the business itself. You can get some income tax advantages when doing that, but basically it's based on the fair market value of the actual asset itself. So if you're a real estate company and you're selling a parcel of real estate, the value is that parcel of real estate. They don't necessarily look at the income that it's earned over time. So your goodwill or your management is not really considered having value as opposed to just for that piece of property. And then the other valuation method is the market approach. And what they do is they look at a comparable publicly traded company, figure out the value there, look at your books, and then try to compare the two to come up with what your company would look like if it were maybe a public company, or what it could sell for in the outside markets. And whether you're planning to sell now or in the future, every business needs written documentation of what should happen upon an event, whether it's if you become disabled, incapacitated, somebody wants to sell, you have a partner that wants out or not, or maybe the partner's done something and you want to hire them, or you want to bring in a partner. It's really important to have documentation in place to address what every partner can and cannot do. Because if you bring in a partner, let's say you're 50-50, and they decide, I'm going to go sell my interest to, this person you've never met, and now that person's your partner, that's a problem. So you want to have documentation in place to prevent that kind of thing from happening, and just rules around how you operate together. My God. Buy-sell agreements are primarily focused on what happens with that transition process, buying, selling, and all of that. They can either be part of your main corporate document, part of your bylaws for corporation, or part of your operating agreement for an LLC, but they're more often standalone documents. And they're usually either a stock redemption or a cross-purchase agreement. Does anyone have a partner they have a buy-sell agreement with yet? A stock redemption is between the company and its owners, where there's an agreement that upon certain events, the company is going to buy back the shares of stock. So there's different triggers that we'll go through, but usually it's just stock, the company's redeeming its stock or ownership interest. Then there's cross purchase agreements. And that's where you and the other owners agree to purchase each other's interests. And usually it's funded with life insurance. So it's not great for, there's a lot of owners because it's expensive funding everybody's life insurance to pay for the ownership, but it is good if there's a relatively smaller number of owners. So some common provisions that are in buy-sell agreements are the right of first refusal. And so let's say that partner wanted to go out and sell that interest to that third party we talked about. This makes it so that you have a right to first purchase that back at whatever price that was offered at, or whatever agreement they came to with that other party. You usually have a certain time period to make that choice as to whether or not to purchase that person's shares for that same price. That way you retain control if you want to.
Linda, can I ask you a question?
Yes.
Now, say you had a property was involved and you had book value, to settle the estate, you would have to put book value on that, right?
For like an estate tax return
Yeah.
if someone dies.
How would they, what's the best way to evaluate that property at that point?
If it's like real property,
Yeah, like real property.
usually you would just get an appraisal and then attach that to the return. If it's in an LLC, if it's the only property in the LLC, you could probably skip getting a valuation of it as an entity. But if there's more than one property in an LLC, you'd probably have to use those appraisals together to get a separate valuation of the whole entity.
Right. And if there's, if it's not equitable, would they have to go, it would become litigious and then you'd have to go to court or something, right?
Yeah. So you have to attach all that documentation to the estate tax return.
Right.
And then the IRS has supposedly 3 years to look at everything and come back to you. Really, it's not always within 3 years, but that's what it's supposed to be. So, and they're starting to look at things more and more, especially the state of Illinois.
Right.
You have to file the state tax return. We've been speaking with their Attorney General's office, and they're right now saying that they're considering auditing every return that is filed.
And do they have arbitrators at the court that they assign to these cases for arbitration so it doesn't go to litigation?
Well, first, it's usually just working with whoever's in their office. And then if it gets to a point of going to court, then,
The court appoints an arbitrator for that type of thing.
Yeah, they could. Yeah, they could.
Thank you.
But hopefully you just work with the agent
I'm
first.
talking from life experience.
Yes. It's not a fun process. It's very stressful.
Where there's a will, there's a relative.
Yes, that's for sure. Absolutely. And that's with valuations, you get different ones based on whether somebody's passed away or you're gifting assets or you're trying to sell. So other common provisions in buy-sell agreements, what happens if somebody dies, that's really important. Address the transfer and subsequent ownership of the deceased owner's interests. If you have a partner and your partner dies, do you really want to become partners with their spouse or their child? I don't know anybody that does. So it's really important to have in place something that says what happens in that instance, whether you buy it back or it gets redeemed or maybe the business has to get sold. You need to have something in place to direct what happens. And sometimes there's flexibilities in those provisions, like you can transfer your shares to your revocable trust for estate planning, or you could to a spouse maybe, or to kids, or other family members. Sometimes there's carve outs in there, but it's important to be aware of those provisions and look at them so you know what would happen to your business if something happened to you. And also you want to address what happens if somebody quits, they resign, or if you have to fire them, or they are retiring, or they become incapacitated, whether it's an accident, they can't work any longer, mental or whatnot. It's important to have the provisions in place as to what should happen, or if there's termination for cause, or even if your partner files for bankruptcy. A lot of times we have triggers and documents that make an automatic redemption happen, so your company doesn't become part of their bankruptcy process. So the options and obligations for each of these instances can be the same, they can be different, it just depends on what you want. Other common provisions are put and call options. So a put option allows the owner to put interest in the business for redemption. Often if, the triggers like retirement, disability and all that. And that's more of like the owner saying, if this happens, I want the business to buy my shares. And then there's also call options, which allows the business to decide to elect to redeem shares upon those events. And then something that's really, really important that we see a lot of clients just ignore from time to time are the payment provisions and the valuation of the business. So each agreement will usually say, how do we value the business? How often do we value the business? And come to some sort of agreement on either the value or the process to determine it, and then how that will get paid if one of those trigger events occurs, if somebody passes away and the shares need to be bought. How will that be funded? Will it be life insurance based, so that when someone dies, there's a life insurance proceeds that are paid that can be used for you to purchase those shares? Will it be a lump sum payment? Will it be over time? All of those things should be laid out clearly in the agreement so you can avoid arguments later when it's a stressful situation. Like I have a client that has a really big growing business, and we just started working together about a year ago. And he has a partner, and their operating agreement valued the business at about $1 million. The business is worth over $100 million now. And they have terms in there that if something happens to one of them, that the surviving partner has to purchase the deceased partner's share and pay for it in a year. And they did not update the value of it either. So that would have been terrible if they just let that sit there and not update it. Because how do you pay $50 million in a year to buy a business? It's impossible if you don't have the life insurance set up or other provisions, or other assets available to do it. Or if you don't have something in there to update the value of the business. So it's not that old value, it's actually something that has to be agreed upon and updated every year. So it's important to have those annual meetings and look at those documents. And so, just to summarize, plan ahead for the transfer. Make sure you're thinking about what you want and you're taking the steps to make it happen, because it takes time. It can take years to get the people in place and get the plan in a place where it can actually be implemented successfully. Who can run your business if you're not there? What if something happened tomorrow? What's going to happen to your business? Start thinking about it now and getting the people in place and the documentation in place so that what you've worked so hard for can still remain. Also, consider the financial and non-financial aspects if you're thinking about that. Engage in estate planning first, very, very important, because if you're too late, then you've lost out on some of the leveraging that you can have with estate planning. Clean up your books, and then operate cleanly so that you don't have to go back and do that later. Determine the value, whether you just get an estimate now or true valuation of something for an event. It's important to know what you have and what it's truly worth. And protect yourself and your business with the buy-sell agreement. Very, very important to have in place, and it's important to update it daily, not daily, yearly, not every day. And then two more things I just want to point out. I don't know if everyone's heard of the Corporate Transparency Act. That is really, really important for you all to be aware of. If you own an entity, corporation, LLC, whatnot, the federal government is now requiring everybody to file annually with FinCEN to report who the owners are of the company, the managers, and all of that. If you do not do that by the end of the year, they could fine you and they could put you in jail. Who knows if they would actually do that? But those are the penalties that are listed for not filing. So it's very, very important to get that filing done. You need to have photo ID that you upload that has your accurate address, whether it's a passport or a license. I know some people don't have their current addresses on their driver's licenses. I don't. I moved. I never updated it. Very important to have that ready to go so you have your filing done by year end. Even if you've dissolved your business this year, they recently said that you still have to file. So be aware of that. Feel free to reach out if you have questions on that. And then one other thing is there was a recent U.S. Supreme Court case that came out this year called the Connolly case. And that addresses business-owned life insurance and could double the value of the estate tax reporting value if somebody dies of their business. It causes the deceased person's estate to have to report not just the value of the business, but the value of the life insurance that's being paid out of the business to redeem shares. So there's easy fixes to that. And so it's important if you have life insurance funded buy-sell agreements to speak with your attorney to make sure that you're not one of those people that has it owned in a way that would cause that double value to have to be reported. Okay. Any questions?
Is there a way to confirm that that filing? I know they give you a receipt, but when it's new, so I know people who've like forgotten whether or not they've done it or not.
Yeah, I don't know. I don't do the actual filings. I have paralegals that are doing that, but there should be some sort of receipt that you filed. So you know. And then if you're not sure, I would go and try to do it again because you don't want to miss that deadline. And you have to file within 30 days of any change. If there's a change of address, if there's a change in ownership or anything like that, 30 days you have to file. Otherwise, they could fine you or put you in jail.
Thanks for the great information. Something that I found out is most people tend to do this very late in the game. And so you were bringing up how important it is to evaluate and to be proactive with this. One success story was a business owner that's a friend of mine. He was looking to buy another business, and he didn't end up buying that business. But then at that time, he said, well, I didn't buy this business. What if I were to buy my business and flip the roles? What is attractive about my business, and do I have everything together to sell? So he's not ready to sell, but he used that as like a proactive way to begin the process that you're talking about, because he just flipped around and then put the mirror in his face and said, well, why would I, if I was a buyer, why would I want to buy the business that I bought? And what do I need to do based on what I learned about the other business that I was going to buy?
Right.
So it was a really good check-in. I never heard someone do that before.
Yeah. One of the things that you would want to look at, clean that up on your end so that it's not there for someone else to see.
And the other thing you said about like cleaning up the books, we were buying with a client of mine a piece of land and a auto repair shop and a building. And sometimes when you run a business for many years, you just do things the way they always were. And we're looking at these numbers with the accountant, and it just was like the valuation just completely went down because there was nothing there to show anything. It was, you get what I'm saying?
Yeah, absolutely.
It was really challenging, and I felt like they really wanted this place, and it was a great location, and everything was good about it except the valuation. When you tied in the valuation of the land, the building, and the business, you put it all together, it just didn't add up. Because now the valuation of the business went down so much, we just couldn't tell what it was really worth.
Right.
And I think the seller was really disappointed, but he didn't get leadership. I mean, years beforehand, he should have been working on this, but nobody did that with him. So, and in fact, it's still on the market now. This was like 6 months ago, so still trying to sell the place.
That was all cleaned up beforehand. There wouldn't have been a surprise and all that.
Yeah, so thank you, it was great.
Yeah, it's good. We say like, think 5 years at least, even for larger businesses especially. It can take 5 years to go through all of that and really get it prestige. And also that gives you time to engage in estate planning and maybe get it outside of your estate and an irrevocable trust, or all of it, so that when the time comes to sell, your low value when you did that estate planning, cleaning up the books after, now you're ready for your big offer, higher fair market value sale. You've cleaned up all the back end of it and maximize estate tax planning too. So it takes years.
But sometimes I think too, when there's that goodwill involved, they want you to stick around for a few years.
Yes.
Right? And help you run. So you really got to plan. If you're the face of the business, they want you to sit there for 3 or 4 years to help bring everything over. So that, you got to tack that onto your plan, I guess. Right?
Absolutely. And And that is where, you know, it can be difficult. You've got to mentally prepare for that. And
You're
we've
the
got people
boss.
who are like, how am I going to do this for 5 years or whatever it may be? So really think about what are you going to agree to when that time comes. 6 months, a year, 2 years, 5 years is a long time to be under somebody else's control
Have
after
you
you've been
run across a scenario where you've had to deal with payment in Bitcoin or digitally? Yeah. No, if I'm buying my business partner out and I want to pay him in Bitcoin, how does that affect his tax scenario?
We have not really dealt with that from an
It's on
income
the
tax
horizon.
perspective. Yeah, yeah. It's, you know, most people don't want to get paid in that way though.
Has the IRS even addressed that yet? How people are getting paid like Bitcoin?
They have released some information on it, but not all the guidance that we would want. So best thing is,
Uncharted waters.
yeah, yeah. And if you could get a seller to agree to get paid in Bitcoin, you know, you're a step ahead, I think.
Yeah.
All right. Any other questions? No? All right. Thank you very much, Linda. So everybody, we do this once a month, Schaumburg Elite Networking Group, 1750 East Gulf Road. If you want to get your business out to, you know, all our followers on LinkedIn, please do join us. And we always have food. It's a good atmosphere, lots of people from different industries. So come on out, Jackie.
And we make deals in this room. Lee Realty did over a $3 million deal in this room. So it's not like we're not putting deals together for people. So it's a much more intimate scenario. And I know from the past, this is the reason Jason and I started this 3 years ago, was because of the fact that when you go to big events, you get swallowed up, you get a lot of business cards, but you really don't get to meet with people. So that's what we're trying to do here. We're trying to make an intimate business scenario that reaches people and that we can continue to grow with.
So thank you, Bank Financial. Thank you, Linda. And see you guys next month. Thank you.